Hello everyone. Today we're starting with the foundation of AS level accounting, double entry bookkeeping for cash transactions. By the end of this video, you'll understand why every transaction has two sides and how to record them in T accounts. Every business uses an accounting system to track its performance. This system is built on double entry bookkeeping. Think of it like this. If you give a friend $5 for a book, two things happen. You gave away cash and you received a book. In accounting, we must record both sides. That's why it's called double entry. In accounting, we record everything in ledgers. To understand the relationship, think of the ledger as a library. It is the one place where all financial data is stored. If you want to know how much cash the business has, you don't search the whole library. You just pull down the cash book. If you want to see your total sales, you pull down the sales book. Each book or account gives you a complete history of transactions of a similar nature. Now let's look at the ledgers account, which is also called the T account because of its shape. The left side is the debit side, abbreviated as DR. This side always records what is received by the account. The right side is the credit side, or CR. This side records what is given or leaving the account. So how does this actually look in practice? Whenever there is a financial transaction, it triggers a dual effect. This means for every single entry we make on the debit side of one account, there must be a corresponding entry on the credit side of another account. One key thing to remember: the detail column must show the name of the corresponding account. This helps us navigate the ledger. It tells us exactly which account was affected on the other side of the transaction so we can see the full picture. Now let's look at cash transactions. These occur when money is paid or received immediately, whether it's physical notes or through a bank transfer. When you record this, remember the business entity concept. We treat the business and the owner as two separate things. If the owner, Nigima, buys a coffee for herself, it doesn't go in the books. But if her business buys inventory, this is a business transaction, so it goes on the books. Now we will look at some examples. Here in the first one, Nigima starts a business by putting $8,000 into a new business bank account. Since this is the first time we are using the bank account, we open it now. For the next similar transaction, we just keep adding it to this account. We also open Nigima capital account now. If Nigima further puts her own money into the business, we keep adding it to this account. The two sides of the transaction are that the business bank account receives $8,000 and Nigima gives the business $8,000 capital. Therefore, we debit the bank account and credit the capital account. Okay, here Nigima buys a vehicle for the business and pays $3,000 from the business bank account. Here, the two sides of the transaction are that Nigima's business receives $3,000 vehicle and the business bank account pays the $3,000. So we debit the vehicle's account and credit the bank account. Nigima buys good that she plans to later resell for profit and pays for the good by the business check. Here, the two sides of the transaction are that the purchase account receives $2,000 and the bank account pays for the $2,000 worth of good. So we debit the purchase account and credit the bank account. Here, Nigma manages to sell $1,000 worth of good and she puts that money in the business bank account. Can you guess what the two sides of this transaction are? You can pause now and think. The two sides of the transaction are that the bank account receives $1,000 and the sales account gives $1,000 of goods to the consumer. So we debit the bank account and credit the sales account. A customer returns good and is refunded $60. Here, the two sides of the transaction are that the sales return account receives $60 and the bank account pays $60 to the customer. So we debit the sales returns account and credit the bank account. Okay, so this is the final. Nigma withdraws $500 from the business bank account for personal use. Drawings is money that the business owner takes out of the business for personal use. It is not the same as income or salary. The two sides of the transaction is that the drawing account receives $500 and the bank account gives $500. So we debit the drawings account and credit the bank account. Okay, that's it guys. In the next video, we will discuss credit transaction. If you have any doubts or queries, feel free to reach out to me in the email address in the description. See ya!